What's up, family? Pierre Thompson here with UFL, Unlocking Financial Literacy. And today, I'm going to break down one of the smoothest strategies that I know to help you create monthly income utilizing the stock market. That strategy is the poor man's covered call. If you have a small account and you've been hopping from strategy to strategy, and all you really want to do is become profitable, the poor man's covered call strategy might be the right strategy for you. I want you to think about owning rental real estate. And I want you to think about getting paid every single month from your tenant. And now I want you to imagine that Wall Street is actually your tenant. Now I want to tell you the best part and the things that we will not need to collect this monthly income. We won't need, number one, a mortgage. Number two, boatloads of cash. Number three, we won't need any credit to make this technique happen. All we want to do is use our small account to generate monthly income month after month after month. Anyone can do it. Let's get into the mechanics. Let's help you change your financial future using the poor man's covered call. See, most newbie traders struggle with one of these three issues. Number one, they don't have a reliable strategy. They're more or less hopping from one stock to the next stock, and they're hoping and praying. And hope and prayer in this market is not a strategy. Number two, newbie investors hop into strategies that are too advanced for them. Newbie investor and day trading does not go together. Day trading takes a level of experience and a skill set that you cannot possess as a newbie trader. That's why you're losing so much cash. Get with a strategy that matches your experience level. The third thing is they believe that they need $20, $10, $30,000 before they can become profitable. No, you just need to fix your strategy to adjust to the amount of cash that you have on hand. There's strategies for every cash level. You got a small account, you use strategies that can work for smaller accounts and as well as bigger accounts. But I'm going to show you today how to flip the narrative. The poor man's covered call is like getting the keys to a luxury penthouse for pennies on a dollar. See, you still control the asset and you get the same rental income every month, but you didn't have to pay for the whole thing outright. When you have a small account, the key is using leverage to your advantage to grow your account as fast as possible. All right, let me set the stage real quick. A covered call is when you buy 100 shares of stock and then you turn around and sell an option against those 100 shares that you own to collect premium every single month. Premium is cash. That's your rent check. Problem being is, I'm talking to new investors that probably have smaller accounts. So when you get into good stocks like Tesla, Apple, Nvidia, that can cost you tens of thousands of dollars to purchase those 100 shares. That's upfront cash. The problem with that is when you have a smaller account, even if you have enough to purchase 100 shares, that might max your account out. This is where the poor man's covered call really shines. Instead of buying 100 shares of stock, you buy a long-term call option called a leaps option, which gives you control of said stock for a year or more. And since the leap option, if bought correctly, will move almost in lockstep with the stock, it's like having ownership for far less money. Then you turn around and you sell a short-term call option against the leap you just purchased. Boom. That's your rent check. That's how you collect monthly income every single month from the stock market with a little bit of cash. You never thought that you would become a landlord with that little bit of money that you have in your account right now. That's just the power of options. Knowing how to use options correctly and knowing how to put together strategies that can help you maximize the cash that you have on hand is the right move for all newbie investors. Think about it like this. Owning 100 shares of Apple, right? That's like owning a house outright. You pay cash for it, cool, but that's very expensive. But buying a Leaps option contract on Apple and then selling monthly calls, that's like leasing a house wholesale, but still collecting the same monthly rent. See, you didn't put $200,000 out your pocket. You just put down $2,000. And you're still collecting the same $1,000 monthly rent as the person who bought it outright that paid $200,000. All right, let me give you a quick example to make sure this thing clicks in your brain. So let's say you had to buy 100 shares of Apple. Today, Apple is trading for about $235 per share. 100 shares will cost you well over $23,000. That's heavy. That's a lot of cash. But let's say instead of buying 100 shares of stock, you bought a 1-year Leaps contract, right? Which gives you control over those same 100 shares. But let's say the Leaps contract only cost you $2,500. And let's assume that you have about $7,000 in your account, giving you enough money to not buy one, but buy control of 2 Leaps contracts, giving you control of 200 shares of stock. And let's say each one of those Leaps contracts could bring you in $500 a month. That means you spent $5,000, you bought 2 Leaps contracts, and you bring in $1,000 a month. $500 for one Leaps contract and $500 for the second Leaps contract. Because what you're going to do is you're going to sell a short-dated call option against both of the Leaps contracts that you now own. You paid a down payment of $5,000. You bring in monthly income of $1,000. Ask any real estate investor that you know if they can bring in $1,000 for every $5,000 they spent on real estate. That is an astronomical return on your investment. Now, don't get it twisted. Any strategy that you employ in the stock market has risk. So let's talk about some of the risk of the poor man's covered call. So if the stock loses value, your Leap will also lose value. And if the stock rises too fast, too quick, your upside potential is capped by the call that you just sold. But here's why it works. You're lowering your cost basis compared to buying 100 shares of stock. You're paying a fraction of that cost. You're also bringing in consistent monthly income as if you owned rental property. You're also compounding. You're reinvesting the premium that you bring in every single month to grow your small account even faster, making this strategy the perfect bridge for newbie traders who want consistent income without the risk of blowing up their accounts. If you're tired of losing money chasing trades, and if you're ready to collect monthly income from Wall Street, then the poor man's covered call needs to be inside your strategy playbook. This is the same strategy that pro traders use and institutions use to print cash flow. The only difference is now you know how to employ it inside of your own portfolio. Drop a comment if you want to see me do a live example of a poor man's covered call. And if you're really serious about learning strategies step by step, like the Poor Man's Covered Call, in the description, I have a 30-day boot camp. And inside my 30-day boot camp, I will teach you the Poor Man's Covered Call and 3 bonus strategies to help you make your first $10,000 in the stock market as a newbie. Family, don't overcomplicate the game. You were taught your whole life how to be a worker, but the stock market gives you the tools to be an owner and a boss. The Poor Man's Covered Call is just one example of how to turn Wall Street into your tenant and also your personal bank. Remember, charts to checks and knowledge to income. This is Pierre Thompson with UFL, and I'm wishing all of you guys peace, love, and financial freedom.